Hey everyone, welcome back to the channel. If you're watching this, you're probably interested in growing your money without taking any big risks. Well, do I have a treat for you today? We're talking about two popular ways to keep your cash growing safely: the money market account and the high-yield savings account. And trust me, by the end of this video, you'll know exactly which one is the better option for you. I know what you're thinking. Isn't saving money just, saving? Well, yes, but there are smarter ways to save. Because let's face it, saving money in a regular savings account that's paying you pennies is like trying to lose weight by eating a whole pizza and hoping for the best. It doesn't work that way, folks. Today we'll break down money market accounts and high-yield savings accounts, what they are, how they differ, and which one will give you the best bang for your buck. And don't worry, we'll keep it fun and easy to understand. So if you're ready to learn how to make your money work harder for you, hit that like button and let's dive in. And before we start, don't forget to subscribe to the channel and share this video with your friends who are looking to make better financial decisions. Trust me, they'll thank you later. All right, let's start with the money market account, or MMA if you're into acronyms. So what is it? A money market account is a type of savings account offered by banks and credit unions that typically offers a higher interest rate than your standard savings account. But, and this is key, it usually comes with a few extra features that can make it feel a little fancier. Money market accounts often come with a check writing feature, which means you can write checks directly from the account, making it a little more accessible than a typical savings account. Some also offer debit cards. It's kind of like having a savings account with some of the perks of a checking account, but with better interest. Picture this. You're at the grocery store and you realize you're short on cash, like $3 short, so you pull out a check from your money market account to cover it. Well, that's one way to show off your fancy savings account. Plus, some MMAs offer a higher minimum balance requirement, but don't worry, we'll get to that in a minute. One of the biggest draws of a money market account is the interest rate. You're usually looking at anywhere from 0.5% to 1.5% in interest, which is a pretty nice bump compared to regular savings accounts. Some of the best MMAs can even offer higher rates depending on the bank or credit union. But remember, like any financial product, MMAs come with pros and cons. For one, there's often a minimum balance requirement. If you don't maintain the required balance, say $1,000 or more, you might be charged a fee. Additionally, there might be a limited number of withdrawals you can make per month, sometimes just 6. So if you're a frequent spender, it might not be the best choice. Now let's talk about the high-yield savings account, or HYSA, which is basically a turbocharged version of your regular savings account. The main difference between a regular savings account and a high-yield one is the interest rate. In fact, the interest rate on a HYSA can be anywhere from 1% to 5%. And in some cases even higher. That's a pretty nice increase compared to the 0.01% interest that you might be getting from a standard savings account. And the best part? High-yield savings accounts are typically more accessible than MMAs. You don't usually have to maintain a high minimum balance, and there are often no monthly fees. Plus, most high-yield savings accounts don't have the withdrawal limits that money market accounts might have, so you can take money out whenever you need it. Sounds pretty great, right? The only downside to a high-yield savings account is that while the interest rate can be higher than a regular savings account, it's typically not as high as what you'll find with a money market account. However, the rates can fluctuate, so it's important to shop around and find the best one for you. It's kind of like comparing a sports car to a family sedan. Both will get you where you need to go, but one's a little flashier and faster, and yes, you can get a little more aggressive with your interest rate in a money market account. All right, now it's time to get into the real nitty-gritty. What's the actual difference between these two? Well, let's break it down. First, let's talk about interest rates. Money market accounts typically offer slightly higher rates, but this can vary depending on the bank or credit union. High-yield savings accounts, while often still higher than regular savings, can offer slightly lower interest, though some of the best ones are competitive. It all comes down to finding the best deal. Second, there's the minimum balance requirement, money. Market accounts generally require a higher minimum balance. Think anywhere from $500 to $2,500, while high-yield savings accounts usually don't have one, or have a very low one. So if you don't want to worry about having to keep a high balance, a HYSA might be the way to go. Think of it like going to a fancy restaurant. Money market accounts are the steak and lobster special that comes with a fancy price tag. High-yield savings accounts, more like the burger and fries, but hey, still pretty tasty. Then there's liquidity. High-yield savings accounts tend to be a little more liquid. You can get your money out without having to deal with restrictions. Money market accounts, on the other hand, often limit how many withdrawals you can make per month. That's something to keep in mind if you think you'll be accessing your funds regularly. Lastly, we've got the check writing feature. Money market accounts tend to allow you to write checks or even use a debit card in some cases. High-yield savings accounts, however, are usually just for saving money. No checks here. So which one should you choose? Well, it really depends on your needs and goals. If you want higher liquidity, no fees, and easy access to your money without any fancy features, then a high-yield savings account is probably your best bet. It's perfect for building an emergency fund, saving for short-term goals, or just stashing cash somewhere safe. On the other hand, if you want a higher interest rate, are okay with a minimum balance, and don't mind the occasional withdrawal limit, then a money market account might be a good choice. It's great if you want to grow your money a bit faster while still having some flexibility with check writing and other features. At the end of the day, both of these accounts are better than sticking your money under the mattress, unless you're a fan of mattress investments, which I don't recommend. So there you have it, folks. Both money market accounts and high-yield savings accounts have their pros and cons. It all comes down to what works best for you. Do some research, shop around for the best rates, and figure out what fits your financial goals. If you enjoyed this video, make sure to like, subscribe, and leave a comment below telling us which account you're going to choose. And don't forget to share this video with anyone who's looking to make their money work harder. Trust me, they'll thank you later. Thanks for tuning in, and I'll see you in the next one. Until then, happy saving.